And the new CPI report shows U.S. inflation cooled in May, raising hopes that price pressures are easing. The May Consumer Price Index had no change from the month before, while overall inflation was 3.3% compared to the same time last year. The report comes just hours before the Federal Reserve is set to make a pivotal decision on interest rates. ABC's Elizabeth Schelsey joins me now for more. Elizabeth, sometimes these economic reports can get a little bit boring, but this one can have a direct impact on our credit card rates, on home loans, car purchases, you name it. So break down these numbers first. What do they tell us about the economy and what it's going to look like when we go to the supermarket?
Yeah, never boring, Diane, when you're talking about the price that you pay for everyday staples. I mean, we're talking about groceries, rent, clothes, gas. And this report is generally good news on that front. For months and months, Diane, it seems like we've been talking about inflation going up more than expected. But here we are at that 3.3% rate. That is back to where we were at the start of this year when the trend really was prices cooling down. So prices are still going up. That number is still higher than a 2% rate, which is what would be considered healthy in the economy, but it is an improvement, especially when you think about that 9% rate that we saw a couple of years ago at this time. When you look at specifically the categories where prices are going down to, Diane, it is in a lot of those everyday staples. So for groceries, for example, eggs, fresh vegetables, butter, milk, all those prices were lower in the month of May. Gas prices were down, airfares were lower, new cars and clothes. So day-to-day staples that people would see some improvement there actually see prices lower than the month before. At the same time, there are some culprits when you think about what is causing this lingering inflation in the economy, and the biggest one is rent. We did see rent prices still go up 0.4% in May from the month before. That's been an area where economists have been hoping we'd start to see some cooling, but it does continue to kind of defy expectations. And then, of course, there's just this overall sense of some of the services you pay for, so things like medical care. One other note is that we're seeing this big difference, Diane, between the price of going out to eat and groceries. So while some of those grocery prices are cooling and going down, the cost of going out to eat is still up on a monthly basis.
Now, the Federal Reserve is scheduled to announce a major policy decision later today. So what impact could this new inflation report have on interest rates?
And it's such a key piece of data for the Federal Reserve because the reason why the Federal Reserve has kept interest rates, borrowing costs high, is because it wants to try to bring down inflation. It wants to see this trend that inflation is cooling. So this report today will be welcome news for the Federal Reserve. It'll welcome this sign that if prices are cooling off. At the same time, the Fed is not expected to finally lower interest rates today. It wants to see that this trend is going to stick around. This isn't a one-off or a couple months of good news. It wants to see that that's more the case in the long term. What this likely will do, Diane, is make it more likely that the Federal Reserve could cut interest rates in September. So there's been this debate, will it come sooner in the year? Will it come at the end of the year? This inflation report could make the Fed a little bit more confident. It could be sooner rather than later.
All right, Elizabeth Schelsey, thank you.